Hello, welcome to Tax Gems 2025. I am Sharice, the owner of Montgomery Maximized Tax Service. It is a pleasure to be here with you tonight. This is day one of the 12 days of Taxmas, and I am happy to bring to you the current changes that have been made to the standard deduction. First of all, some of you will say, why is this important? It's important because this is drastically going to affect how you're categorized and what tax bracket you're falling into. Whether you're in the 10%, 12%, 20%, 35%, we need to know where you at. We need to know what category you're falling into. All of this matters. The standard deduction plays a big part in that. So, what is the standard deduction? The standard deduction is these numbers here that you see on my screen. Those are the base numbers that they have allotted you that will be deducted from your gross income. Your gross income. What is your gross income? Your gross income is all monies that you receive throughout the year, whether it's salary, wages, interest, dividends, capital gains, everything you've collected throughout the year. Now, if you even received more than $5,000 on Cash App, Venmo, or any of those other sites, you will receive a 1099-K. We will talk about that later in the week, but that also will be classified as income. So let's talk about it, people. Let's start out with my singles and my married people filing separate. First of all, I apologize tonight that I'm not actually live. We had some technical difficulties, so therefore I had to post a video. I wasn't actually able to go live, but you still can leave comments in the post under the video, and I'll be able to get back to you. Now, back to my single people and married people filing separate. They raised the standard deduction for you guys this year. The standard deduction for you guys is $14,600. That's up $750 from last year. Last year it was $13,850 for you all. So that puts you in a different ballpark, because why? If you don't have more than $14,600 in expenses to write off, you are not eligible to itemize. So what does that mean? You're only entitled to that $14,600 to reduce your taxable income. Your taxable income is going to tell the IRS what tax bracket what you fall into, and let them know how much money to expect you to pay them. What do you owe them? That's what it's going to tell them. Now, let me talk to y'all for a minute. Let me drop a golden gem on you. Let's say that you're one of my singles or my married people filing joint, and you didn't even make $14,000 for the year. If you didn't even make $14,000 for the year, and you was a W-2 employee and had taxes withheld from your check, you may be getting a refund based on that. And you may qualify for the EIC, Earned Income Credit. I don't know. It's a case-by-case basis. However, if you are one of those people and you made more than $14,600 for the year, you probably want to schedule an appointment with me on before December the 31st, because up until January 15th, Montgomery Maximized Tax Service will be offering free 30-minute consultations to people that's on this channel. We'll be offering free 30-minute consultations to help you figure out where you are. Because if you can do something about it before, you have options if you put them in place before December the 31st. If you wait till after December the 31st, guess what, guys? It's too late. There's nothing you can do about it. Same thing applies for my married, filing joint, and head of household people. There are things you can put into place if you do not meet the requirements to itemize, because you do not have the total amount of itemized items over the standard deduction. there are still things that you can do, but you have to do them before December the 31st. So if you are one of those people, reach out. You can call us on the phone, 980-280-4173. You can email us. You can drop something in the chat. Drop your email. Send us a message. We'll get back to you. However, do not be one of the ones that get caught in tax filing season saying, I wish I woulda, coulda. Because now is the time. We still have a couple of days before December the 31st, and there are still things that you can apply that will reduce your tax liability while being beneficial to you. Married filing jointly. Yours increased by $1,500 this year. It went to $29,200 from $27,700 last year. Again, if your total expenses do not exceed $29,200, do not contact me, your current preparer, or any preparer. There is nothing we can do for you. And this would include all of your deductions, including your mortgage interest, your medical expenses, your dental expenses, large charity donations. If they do not total more than $29,200, you need to contact Montgomery Maximized Tax Service today, because there are options available to you prior to December 31st. If you wait till after the 31st, it's too late. It's nothing you're going to be able to do. You're just going to have to take what's given to you and what's on the table. Head of household. Let me talk to y'all directly. I need to be talking to y'all directly. Why? Because y'all standard deduction was raised to $21,900 from the $20,800 that it was last year. Why is that important? It's important because that standard deduction amount reduces your gross income and puts you in a tax bracket. You need to know what tax bracket you're in, because all of that affects your earned income tax credit, your child tax credit. It affects a lot of things that plays into this tax number with your refund. So that's important to know. What happens if you're head of household and you made right under $21,000? Guess what? If you was a W-2 employee, you may be looking at a refund still, because any money that they withheld from you, you would be entitled to it back. If you are a sole proprietor, a freelancer, or an independent contractor, if you didn't make $21,900 and you are head of household, you need to be contacting somebody and talking to somebody. There are things that you can put into place that can help reduce your taxable income prior to December the 31st. If you wait till after December the 31st, there's nothing you can do about it. But if you are one of those individuals and you did not make $21,900, you may be able to file a NOL, which is a net operating loss, which would still put you in a different ball game. Again, it's a case-by-case basis. We don't know. You would have to tap in and schedule your free 30-minute consultation for us to be able to help you. However, those are the gems that we've put on the table for tonight. I hope they was useful and helpful for you. Tomorrow, we will be talking about the updated changes that they have made to the current tax brackets, and you don't want to miss that gem. If you don't know anything else, you want to know what tax bracket you in and what tax liability you may be facing. So drop in tomorrow to get your second gem. We'll be on day 2 of 12 days of Taxmas. You don't want to miss these gems because they are going to be helpful and useful to you. Like, share, and subscribe to all your friends and family so that they can be just as educated as you are. And if you feel like it's too much for you, you don't have to be educated and do it. That's why I'm here. Reach out. I'll be happy to help. See you tomorrow, same time, same place. I can't wait to show you what I found out about the updated tax brackets so you'll know what to expect and what your pockets may be hit for. Talk to you tomorrow. Have a great night.